welcome back after lunch. I hope you're all fed and we have your full attention. We'll be discussing digital asset treasuries. It's obviously been a very hot topic over the last couple months. We have here lots of different assets, different structures that we want to get into the different models, because I think digital asset treasuries have been lumped into one category of the DAT category. And I think that category has really only existed in probably the last 6 months, roughly. Obviously, MicroStrategies is a lot older. 4 or 5 years old now, has been a lot of the leader of this sort of model of public market or publicly listed company for digital assets. But the goal is to get into how different they actually all are, both depending on the asset, depending on the structure, the model, with our great group here. And so I'll quickly introduce myself and then pass it off to introductions for our fantastic panelists. My name is Camilla McFarland. I am the Chief Growth Officer at the Ether Machine. We're one of the biggest Ethereum DATs, launched a couple months ago. Our team has been working in the Ethereum ecosystem, all of us, for the better part of the last 10 years at Consensus and building out a lot of projects. And we raised roughly 500,000 ETH, so today's prices, that's about 1.6 billion. It was a little bit more yesterday. And we'll get more into the model, but I'll pass it off to Patrick.
Thank you. I'm Patrick Horstman. I'm the Chief Investment Officer at BNBX. We're a NASDAQ DAT focused on BNB and Binance. My background's 23 years as a hedge fund manager, the last 7 running DeFi-focused crypto hedge funds.
And Brittany?
Hi, my name is Brittany Kaiser. I'm the CEO of AlphaTon Capital, NASDAQ ATON. We invest in the growth of the Telegram and Ton ecosystem. I have been in crypto since 2011, but the first half of my career I spent working on regulation and legislation in this industry. I've sat on multiple US congressional committees on blockchain, fintech, and digital innovation, and helped co-write a lot of the legislation in this space. This is also my 3rd company I've taken public on NASDAQ. The last one was one of the world's largest Bitcoin miners, Griffin Digital Mining, which is now American Bitcoin NASDAQ ABTC.
My name is Henry Elder. I am the Chief Executive Officer of Satsuma Technology, which is a London Stock Exchange listed Bitcoin treasury company. And previously, I worked at UTXO Management and Wave Digital Assets, running various hedge funds focused on Bitcoin and decentralized finance.
Cool. Thank you to the organizers and the great panelists. I'm Michael Healy. I'm one of the co-founders of the Unit Network. We're on a mission to tokenize all the world's assets, not just the publicly traded equities or T-bills or bonds, but really the hundreds of millions of private companies in the world that we think should be on-chain. I've been in the Bitcoin and crypto space since 2010. I built the app for WikiLeaks, and when the governments froze our bank accounts, like Visa, MasterCard, PayPal, donation channels, we were forced to use Bitcoin, so we got into Bitcoin at 9 cents. I was in the BNB and Ethereum crowd sale, also connected the founder of Telegram with the founder of Ethereum, Pavel and Vitalik, about 10 years ago. Very excited about the treasury space, and my big excitement is to get all companies in the world to use Bitcoin and ETH and TON and BNB and crypto assets as a treasury asset.
Great. It would be great for our first question to go into the asset focus. So we have BNB, TON, Bitcoin, soon to be launched, DAT potentially. Why that asset? I mean, there's common thinking in the DAT space now of, Bitcoin has a product market fit as a structure. The Ethereum companies, obviously, but there's some skepticism on what is the demand for digital asset treasuries on the long tail of assets. Like, what is the play both in the near term and in the future? So it'd be great to hear from you why that asset. How do you sustain demand and flows over time? And a little bit about your size and that. Yeah.
Sure. So we did a deep dive across a number of tokens, having a background in DeFi with my partners. We'd been doing DeFi activities in a number of different chains, a lot in Ethereum, so we're very familiar with that. But we kept coming back to BNB and Binance as the ecosystem we wanted to align ourselves with for a couple of reasons. One is that BNB is a productive asset, so we could use our skill sets in DeFi to generate yield on top of the token, really without adding directional risk. The BNB token provides native staking of about 2%, which is not super interesting. The interesting piece comes when you actually have a Binance account and you can participate in the launch pool. The launch pool basically gives access to when Binance lists a new token or there's a token generation event. They take the listing fee, which is typically around 5%, and they airdrop that to the BNB holders. So you get that airdrop proportionally to how much BNB you hold. We did an analysis, a 3-year look back. That looks like 8 to 14% annualized on a yield basis over the last 3 years. You can also do some DeFi activities PancakeSwap is the largest DEX in the BNB ecosystem. Lista DAO is the liquid staking derivative token, similar to Lido and Ethereum. When people want to get in and out of that liquid staking derivative token, it takes a little bit of time. So we can provide liquidity between BNB and the Lista DAO token, still maintain our 1x long BNB exposure, earn some swap fees for doing that. And then the final strategy that we would do would be to collateralize the BNB, borrow stablecoins, and do some low-risk kind of non-directional DeFi strategies with stables. The second reason we chose BNB is because of Binance. It's the best business in the space, arguably. Extremely successful, does 40% of global trading volume every day, has a huge amount of users. The BNB chain is very fast and cheap to operate on, and lots of new products are being listed there. But there's really no way for investors, either retail investors or institutional investors, to get access to Binance equity exposure. It's owned by CZ. So this was a way to basically give some kind of quasi-phantom equity exposure to investors, both through the launch pool piece where you're participating in those listing fees. And then the other thing is the tokenomics for BNB. Every quarter they buy back over $1 billion USD of tokens. We originally started with 202 million tokens. We're down to 137 million. So you're participating quasi in the earnings of Binance and the kind of business through the listing fee.
Why TON? Well, how many people have Telegram on their phone in this room? Yeah, most people. And if the whole world was listening, over 1 billion people would raise their hands. So TON being the native blockchain of the Telegram app, one of the top 5 most used apps in the world, is the main exciting part of TON, where we've already seen exponential growth of the amount of users of TON this year and the amount of growth potential that there is left for everyone on Telegram to actually start undertaking on-chain transactions. As of July 22nd, even the US market, all 87 million Americans that have TON on their phone also got access to the TON wallet. But a lot of people don't know that it's there. And they don't know that they own their handle on chain. They don't know that you can own a phone number that can't be stolen from you in a SIM swap, that you own your in-game assets, your gifts, your stickers. So the other reason is, legendary founder Pavel Durov, who's the founder and CEO of Telegram, built Telegram as the only social media platform where you can actually own all of your data and your digital assets in the platform. That's a huge deal when the top 5 most used apps in the world are WhatsApp, Instagram, WeChat, TikTok, and then Telegram. One of those 5 is not like the others. So it's a very exciting opportunity to actually have an ethical choice when you're using messaging and social media applications, and the huge growth potential. For us, that's incredibly exciting. And lastly, because TON has an infinite sharding architecture, it's an incredible blockchain to choose for data protection purposes. So we're building and investing in everything from DeFi to gaming to even healthcare applications that we're building on TON, because it's the right application and the right network to really grow tons of different verticals in the ecosystem.
And what was the thinking, just before we move on to Henry, what was the thinking then for this new public markets offering then for TON, for you, Brittany?
Well,
it makes a lot of sense.
I'm going to say one of the same things that was just said, which is that Telegram is 100% owned by founder and CEO Pavel Durov. You cannot buy shares in Telegram. It is a private company. He's often said he's not taking Telegram public, and he won't sell a single share, so he can't have investors' pressure in order to sell user data or give access to it to governments. So your data is safe there as a user, and it's because Pavel refused to be influenced by anyone. So for us to be able to be a Telegram proxy vehicle where you can invest across the Telegram ecosystem, not just in the price of TON token, but in gaming, DeFi, and other business verticals where we're investing all across the ecosystem, that's what we are providing, because institutional demand is certainly there, retail demand is certainly there, and the opportunity for us to be able to be an ecosystem growth vehicle for the Telegram ecosystem is quite exciting for us, and it seems quite a lot of other people.
Yeah, that's great. And Henry, obviously, it's why Bitcoin, which I think a lot of people are already maybe at that conclusion, but it'd be great to hear more about what
why Bitcoin. That's always a fun one. Well, I guess I could talk about why I was attracted to Bitcoin in the first place and why I think it makes sense to build a corporation on top of it. So 17 years ago, Satoshi put forward an idea that an individual should be able to preserve the fruits of their labor in a capital asset that is insulated from the biases, the broken incentives of the fiat system. And he decided to put that idea forward in the form of a bearer asset with no productive use. So there are no cash flows to discount. There's no subsidies. The value of Bitcoin is simply predicated upon the global adoption of that idea. It is one of the purest forms, one of the purest measurements of the adoption of an ideology that has ever existed in the history of humankind. And today, that ideology is worth $2 trillion, and it has been growing at a compound annual growth rate over 100% for almost 2 decades. That's incredible. And the reasons that that idea has become so valuable and so widely adopted, the fragility that we see in the global system, is not changing. If anything, it's accelerating. And so the idea that you can create a Bitcoin treasury company on top of the continued adoption of this idea and act as a differentiated investment mechanism sitting next to a passive ETF vehicle, I think is incredibly powerful. And there is nothing that I would rather be spending my time on.
There you go.
Yeah. So why Unitcoin? Well, I think where Unit anticipates to be is the global stock exchange. If you walk down the street of any major city, or I'm sure everyone in the room has countless friends working on interesting things. How can you support them? You can sort of introduce them to people. You can help them raise money. You can write a large check. But there's basically 2 sides in society. There's one side, which is the founders and the investors, and then it's the other side, which is the customers and employees. And what excited me most about crypto is the fact that everyone, the community, can have a sense of ownership, right? So I think where Unit plays a nice role is it's going to create a new economy where everyone is a stakeholder, and it's going to be similar to what Binance was when it started. In 2017, when Binance launched, there were a bunch of centralized exchanges, and they were like, we're going to build a better centralized exchange. So, fast forward a few years, now it's one of the leading crypto firms. Now someone might say, hey, why would you want to trade private companies? You want to trade public companies, you want to trade treasuries, you want to trade T-bills. But I think, if you look at social mobility, you look at how ownership is distributed, I think the big value of crypto and what Unit's doing, it's putting all the world's assets on chain, and for me, that's really exciting. We're also backed up by all of these big crypto assets. So Ethereum, Solana, BNB, TON, and maybe finally, I think capital formation is really challenging. I used to work at the 3rd biggest VC in Europe, Wellington. We were seed investors in Spotify, 800 million euro fund, and we got pitched thousands of companies a year, and we invested in maybe 10 or 20 companies. So if you're not in a big city, if you don't know the right people, you don't have a track record, it's almost impossible to raise money. And what we saw with ICOs, with NFTs, was a future of what fundraising could look like. And where the Unit network fits in, it's the most powerful tool for fundraising, for real-world assets, for the long tail of real businesses, and it provides liquidity. It's a trading venue for all sorts of startups, companies, growth, anything pre-IPO, that's what we want to make tradable. And maybe finally, so Brittany and the gentleman to his right mentioned about both of these companies being owned by CZ and by my friend Pavel. Both of these people didn't want to compromise on their values by selling out to a PE firm or selling out to a venture firm. So there wasn't a good option for them to fundraise through the public markets. I guess BNB did through a coin, right? BNB, and I was lucky to be in it, and the community were part of stakeholders and contributed to its growth. But we need to see that for the vast majority of the economy. So that's why I'm so excited for that.
Yeah,
Thanks.
that's great. In our side on the Ether machine, there's obviously similar to Bitcoin and even BNB, some of these other assets, like multiple digital asset treasuries now in that token. For us, when we came to market, it was really the goal of bringing a public markets vehicle for Ethereum for the long term, which gets into a little bit of my next question of the structure behind it. We decided to do a de novo entity, so launch a new company through a SPAC merger. So, not fully listed yet as that business combination completes, but and as is, I believe, you're doing, Michael.
Yep.
Henry. But obviously, that's a longer path to market. It's more regulated, it's more transparent, it's more approved. There's more you can do afterwards in terms of different things from a yield perspective on-chain, from a fundraising perspective, like in structured capital markets. But that's different than what we've seen as the direct listing, looking at a existing micro cap and merging with that business, buying crypto from the balance sheet where you're immediately liquid, you're immediately listed, you have an immediate MNAV. So the structure between these, not just the underlying asset, but the structure and the go-to-market, we've started to see a lot of differences. And then it limits you in who maybe you can take investment from on the institutional side or more retail-focused side. But it'd be great to hear from all of you. I think it's like every model is slightly different on the panel here, on the route you've taken to go to market and some of those decisions you've done. And it would be great to explore a little bit more of the nuances and certainly the pros and cons of them.
Sure. I've fortunately become an expert on this topic, so spent a lot of time with a lot of bankers and lawyers over the last 4 months. The route that we chose to go, I think, kind of became the de facto standard after a month or two of the DAT craze starting, and that's where you do a PIPE investment, which is a private investment into public equity. You do a confidential private offering, you go raise money from hedge funds and family offices and other people like that, and then you make that investment into the public company, typically at the market price. If you do it at a discount, then it requires a shareholder vote. That's done, new shares are created. When you do this method, though, you're not allowed to take control of the company, at least not initially. So maybe you can negotiate for 1 board seat, maybe 2. Generally, you have to be less than 20% of the board. You probably can't fire the CEO immediately, so you have to have a transition plan over maybe the next 6 to 12 months where you're going to slowly take control of the company, assume management, and kind of work out a deal with the existing business. Generally, these public companies are in a position where the main value they have left is the listing. They might have some ongoing operating business, but either it's burning too much cash or it's going out of business. So usually it's a negotiation with that management team to provide some funding, some business plan to get their business either sold or transferred or back on track. My friend David Bailey in Puerto Rico, who most of you probably know from the Bitcoin conference, he was kind of a pioneer here. He did Kindly back in May, and he was kind of the first one to do one of these DATs in the US. And unfortunately, he chose the reverse merger structure, which requires an SEC approval. So his stock went from less than $1 prior to announcement up to $25, $30, but his investors weren't able to realize any of that premium because by the time the SEC approved his merger in August, kind of there'd been a lot more Bitcoin treasuries, the bloom had kind of come off the rose, and basically his stock was trading back down at $1 by the time he actually got liquid. So choosing the right structure and then choosing a public company that you've really diligenced. Is there any litigation in the background? What's it going to cost to run the operating business? How big a component is that going to be? All very important considerations.
Yeah, so I've been taking companies public on NASDAQ since 2020. I've done 1 direct listing, 3 RTOs, and more recently kind of like a friendly business deal between our investor group and a listed company. So the way that we took Alphaton Capital public, we DD'd about 16 different companies trying to find the best group of people to work with. And what we ended up finding was an incredible company called Portage Biotech that had some really interesting biotech assets, most importantly, some oncology research assets in phase 1 clinical trial. And these were really interesting assets to actually fund. But in order to fund that, adding in a digital asset line was what we came to do. So I was appointed CEO of the biotech company as Portage Biotech, and then went out and raised a PIPE and debt in order to add in a digital asset treasury as well as our Telegram investment and growth strategy and hire a team and some new board members to help me run that. But our oncology assets are still in phase 1 clinical trial in our subsidiary. Actually, our CEO is here, Peter Malloy. Say hi to everyone. And we decided to integrate that into our digital asset strategy. As I mentioned earlier, TON is an incredible blockchain for data protection because of its infinite sharding architecture, so we're doing some interesting HIPAA-compliant projects. One, tokenizing the assets in order to take this oncology research for mesothelioma to phase 2 clinical trial. And we also announced that in partnership with NASDAQ Health and Tech, NASDAQ HIT, that we're taking their healthcare claims business with over 50 million claims a month on-chain onto TON, which is a huge business that can be a $50 billion a year business. So that is incredibly exciting. And so we have married these 2 businesses together where mostly the digital asset strategy is happening in the top co, and we are investing heavily across the Telegram ecosystem and bringing more interesting verticals onto TON from healthcare to gaming to DeFi and more.
Yeah, I think Brittany and Patrick, actually, you guys did a really good job in terms of going to market with your strategies, because I have noticed that it's slowed a lot of other companies down. And I think that's probably a testament to your guys' previous experience doing this.
Thanks.
We actually tried to follow a similar strategy here in London. But unfortunately, when you raise a certain amount of capital in London, you still need to go through an FCA review process. Now, the idea is that the change to our business was evolutionary, not revolutionary, and ultimately the regulator disagreed with that, sort of fundamental idea, which was fine. It slowed us down, but it offers us quite a bit more flexibility in the long run, and it also gave us the time to sort of restructure the business in this more revolutionary manner that has served the ultimate purpose, the ultimate vision of the company very well, and has allowed us to do that more quickly than we would have if we had simply gotten through this evolutionary process, which would have taken a lot slower. So we're still under FCA review currently, going through that longer process, but we are pretty enthusiastic and encouraged on our progress through that. And the FCA, I think, has traditionally been seen as a sort of crypto skeptic, and I think that perception has changed significantly. They've been a regulator that's been working with us considerably as we structure what is essentially the first Bitcoin treasury company on the London Stock Exchange.
Yeah. So it's, for both you guys at Satsuma and for us at the Ether Machine, it's almost the de novo company model, where you're like, handpicking the management team, launching the company, no legacy liabilities, no legacy balance sheet. But the obvious downside is the speed. So potentially better for the long term in some ways, but then you lose out on some of what we've seen of that initial accumulation, that initial velocity.
Yep.
And sorry, Michael, it'd be great to hear, you haven't launched your DAT yet, but obviously learning from what's working, what's not working. There's obviously pros and cons to both models, like how you would, if you can share, how would you think about going to market?
Absolutely. So we were originally looking at Toronto and Frankfurt to list digital assets treasuries. We opted for NASDAQ and Hong Kong, being bigger financial markets. Our big perspective was that we wanted institutional holders to get into Unitcoin, the coin for our blockchain, at a much earlier stage. We thought, if you could buy into Bitcoin, 5-10 years ago, or Telegram or BNB much earlier, that's an advantage. So institutions can have basically access to Unitcoin.